The May mortgage market update. That's a bit of a tongue twister. Welcome back, Tom.
Morning, Mark.
Tom Foy Financial. He's great. Would you lend $175,000 to your 20-something son or daughter with a monthly take-home pay of £1,700?
Probably not.
Probably not. But there is a lender who would.
There is, yeah. April Mortgages offering this new product to the market, up to 7 times income for up to a 15-year fixed rate product.
Which is insanity.
It's unheard of.
It is incredible.
It's unheard of.
Have you dealt with one of these?
Nope.
It is new to the market.
It is new.
It's quite
Yeah.
interesting. They have been stealing the headlines, apparently.
Yeah.
But there are lots of lenders increasing the multiples by which they will lend, I believe.
That's correct. Yeah.
There's the Nationwide Helping Hand at 6 times.
Correct.
Halifax First Time Buyer Boost 5.5 times.
Correct.
And they're also relaxing stress testing, which has been encouraged by the Financial Conduct Authority, who imposed them in the first place.
Yes, exactly. So
The city regulator.
yeah, as rates come down, monthly payments will be cheaper, so naturally stress tests will come down as well.
Yeah, which is a good thing, probably, in general. On Wednesday, the Yorkshire Building Society announced it has relaxed its stress tests, but this is happening pretty much across the board.
Across the board, across the market, everyone is doing it to stay competitive.
And very interesting, Empower, I think you're familiar with Empower.
Yeah, familiar with Empower?
Have offered a home in one day mortgage, whereby 95% of their lending decisions are dealt with in 24 hours.
Yeah, it's very good. I wish all lenders were like that, to be honest.
It is dependent on everybody getting the paperwork to them as well.
Of course, yeah.
So the current mortgage rates are being slashed pretty much across the board, I think, aren't
Correct, yeah.
they? And a lot of lenders are now below the 4% mark.
Yes.
And lenders are offering 2-year fixed rates around the 3.5.
Yeah.
I think we'll come on to some of your offerings a little bit later.
Yeah.
But it's really all heading the right direction. So the Bank of England brought the base rate down 4.5% in February. And I think they're due to bring that down to 4.25% tomorrow.
Correct, yeah. I'm 99% certain that we're going to see a reduction tomorrow. And I've heard some whispers that there could potentially be 2 cuts in June as well.
Yeah, maybe 3.5% by autumn and maybe 3% by the end of the year, which would be
fantastic.
Absolutely fantastic.
Yeah.
Lending forecasts. The UK projects 10% increase in lending to home buyers in 2025, reaching 1.48 billion.
Yep.
Which is attributed to improved mortgage affordability and steady demand.
Yeah, no, definitely the stamp duty change helped that in the first quarter.
Of course.
But again, naturally, as rates come down, it's going to be cheaper for people to borrow money. They're going to be encouraged to then move on or even buy their first property.
So let's move on to some of your offerings, I think.
Yeah. So, as we speak today, there are first-time buyer rates starting at 3.88%, remortgage rates starting at 3.84%. There are buy-to-let rates out there that start at 1.69%, which is pretty amazing.
Incredible. What's the criteria for that?
Well, standard buy-to-let criteria, but it does come with a higher arrangement fee.
Right, okay. Is that a fixed term?
That would be a fixed term.
Okay.
Yeah. A more competitive product because of the 5% arrangement fee with the 1.69% deal. There are more competitive products out there over the fixed period. Another example would be a 3.9% interest rate with a £1,500 fee.
Right, and you were saying some of these high multiple lenders are doing, was it 6 times at 95%? Was it 6 times at 95%?
Yeah, Nationwide are doing 6 times income at 95%, which is, again, pretty unheard of.
That is extraordinary. So the remortgage market is very busy.
Yeah.
And I think a lot of people who took very low rates, fixed for 5 years during the pandemic, will be coming to an end this year, in fact.
This year, yeah.
So they'll be looking at what, 3-4%?
They're going to be looking at something that starts with a 3, maybe a 4, hopefully a 3. So there's a big question out there. Should people renew now or should they wait?
That is a good question.
Yeah, but if they do wait, they need to understand that they will make payments on a variable rate. Variable rates are on average around 7% at the moment.
Right.
So it's going to be a huge jump from 1 to 2% to 7% to gamble and rely on that the rate still falls and then secure a 3% rate.
Yeah.
You know, I don't think the payments at 7% will offset the saving if the rate comes down
So
to 3.
do it immediately. If you're coming out, you don't want to be on a variable rate.
Exactly that.
Full stop.
Yeah.
Well, I think everything's looking great moving forward. I hope you're busy.
Yeah, we're very busy. Everything's going in the right direction, so long may that continue, Mark.
Doing a great job for us, Tom. Thanks very much.
No problem.
Thank you very much for watching. I hope you found that useful. We're doing the Renters' Rights Bill tomorrow, so that's going to be interesting. That should be a 2-hour podcast, probably. We did the sales market update earlier on, which is jolly good as well. So keep your eyes open for those. Make sure you're following me on all my social media channels, Instagram, TikTok. Thank you for watching. See you next time.